moving on to vol. Now the charts look a bit different this week because my GVol API broke, so I had to use the GVol app. So these are charts that you can get directly off the GVol app. They're obviously nice looking charts in themselves, but obviously I like the way I do it, and it's all in my nice clean spreadsheet. But you guys can still see the same information here. So realized vol, we compare here. We've got 7-day realized versus 7-day implied. So you got a big difference there. It's kind of been quite a wide gap for a while, even with the break higher in spot. That's a 22 vol point gap there. Similar story with Ethereum. We've got a 30 realized and a 52 implied. It's a massive gap between implied and realized. So that's that positive carry that we talk about. It's currently about 22 vol points right now. So, realized vol in Bitcoin stuck at 16. Ethereum's at about 30. Ethereum did get down to around 20 or low 20s, but it has had a bounce up to 30 now. But that's not overly impressive, to be honest, given that, if that's the most it can do. It's trading more like an equity than crypto these days. Now, the variance premium, I do think, and this spread between implied and realized, some people call it variance premium. I call it carry, but some people call it variance premium. That's what Greg at GVol calls it, variance premium. So that's likely to close, I think, to some extent after CPI on Thursday as we head into the weekend. So you're probably going to get a bit of systematic sellers coming out on Friday to sell back the vol. They're not as big or impactful as they used to be, but I still think they'll come, especially after the CPI. So you should see these numbers crunch back down, and that implied vol kind of heads south again. Maybe it goes back towards 30. So that'd lose 8 vols in the weekly. And then in Ethereum, it's probably going to trade back into the mid 40s if it comes down. So those are the kind of things that are pretty realistic, unless we get some massive move on CPI, which I don't necessarily think we will. Okay, so that's what I'm seeing on the realized vol front. Then if we look at term structures and vol, just implied vol levels. So here you've got the kind of time series. You've got the time series of the implied vol for all the different tenors: 7-day, 30-day, out to 180-day. So you can see the gaps between these lines effectively tell you how steep the term structure is. Okay, and you can also see the cross section of that on the right hand side here. So a week ago is the orange curve, and that was pretty damn steep. It was in steep contango. Okay, so what we've had these things crunched together, right? Since we broke higher, you've had the front end pop, and the back has continued to come lower. So you've got this flattening of the term structure that was in a steep contango where no one wanted to touch any options expiring in the first week because markets just weren't moving. That suddenly caught a bid, and the back end has continued to come down. So the curve has flattened, right? And you've seen a more dramatic flattening even on Ethereum. You can see those lines have crunched together pretty much. And that blue curve is kind of your Ethereum curve that is quite flat right now. So that's a flat term structure we've got pretty much after this recent little pop that we've had in the market. Okay. Now, I've been kind of biding my time to buy longer dated vol. I do think June vol is quite attractive, but I'm just kind of biding my time to wait for a reason to buy it instead of just trying to kind of catch the falling knife. So I haven't really piled into a load of Vega just yet. But, the fact that the curve's flattened in that way where they've lowered that back end even more, if I did go and buy some vol now, I'd probably be doing it via calendars where I own the June and maybe sell a bit of March against it as a funding leg and own the forward volatility that way and say, well, I don't know what's going to happen in the next 2 months, but owning some forward vol between March and June where I think stuff could get interesting again in terms of movement, especially to the downside, that might make sense to do basically. So that's the kind of trade that I've kind of got on my radar now in response to how the curve is flattening. Okay. And then finally, the ETH Bitcoin vol spread that I always track, that was running at about 10 vols across the surface last week, has popped a bit. So that's inverted in the front. It's about 15 vols right now. Ethereum trading over Bitcoin in the front maturities. And then in that longer term, it's still at about 10 vols if we go as far out as kind of 6 months. Okay. I haven't done any of that spread yet, but again, monitoring it. If it did manage to get in that 5 to 10 region and I wanted to pull the trigger, that would be the kind of levels I'd be looking for. But I'm not going to be chasing it up here at 15 vols, basically. I think it's a bit of an overshoot because we had that big sort of pop in the ETH Bitcoin spread in terms of the spot ratio. And now that that pop's done, I wouldn't be piling in necessarily to Ethereum right here. Ethereum vol, that is. Okay, so then we'll move to SKEW. So you can see here, SKEW's had a bit of a move this week. So SKEW's been gradually compressing as we had general risk premium coming down because realized was so low. So people like sell what I can sell, which is whatever's quite expensive still. But then that's kind of accelerated. That move has accelerated. I have spelt that wrong on this slide, by the way. My spelling is terrible. So this is obviously a typo. And the SKEW has flattened more aggressively because obviously people have started bidding for calls. As we started to break to the upside, when we broke 17K in Bitcoin, and then we started to take out 1,300 or 1,250 and then 1,300 on Ethereum, people started piling into short-dated calls. And that obviously flattens the SKEW because the SKEW was for puts, and now people are rather more interested in buying calls instead. They're happy to sell puts and buy calls. So you get that movement in SKEW. So you can see the evolution of the SKEW here. The 30 days, the orange line. So the 30-day was kind of popping here on the 4th of Jan, it's about a week ago. It did come back down as the break didn't really happen, and now it's kind of gone again. So we're about 2 vols still for puts, but in the weekly, which is 7-day expiry, we're close to 0. So it's pretty much a symmetric surface. And you can see here that, again, I've done the cross section here for the 1 month. So you can see what the vol is across all the different strikes for the 1 month. So you can see all the put vols over the last month have been collapsing, and the call vols sort of 24 and above are the same. So it's not that we've had this massive call vol bid. It's just that call vols haven't moved and the puts have all compressed, right? And that's flattened off the SKEW, and that's made the SKEW look more symmetric, whereas it's skewed to the downside, whereas now it's a more symmetrical smile with your at the money vols, the bottom of the surface here, and the vols go up in both directions, basically, right? But it's a more symmetrical SKEW because when we look at the SKEW, we're looking at the put vol versus the call vol, right? And if those two things are at the same vol level, then the SKEW is neutral. The SKEW is quite flat. So that's how we measure it. So in Bitcoin, you can see here, we've got longer dated stuff at around 3 vols puts over. We've got the weeklies at 0. If we look at the same stuff in Ethereum, those longer dated are closer to 6 to 7 vols still for puts, and the weeklies are about 1.7 for puts still. So it is compressing, but Ethereum's managing to keep a put bid, and it's keeping more of a put bid than Bitcoin is, because it's perceived that on the way down, Ethereum will crack to the downside because it will have more beta, and it's still got its final crash in it, basically, right? I think there's this perception that Bitcoin's already had a bit of a crash and the liquidations are done. People are parked in Ethereum still, and if that was to break 1,000, all hell breaks loose. We get an acceleration to the downside, okay? And that's why that SKEW's kind of holding some risk premium in Ethereum. Okay, moving on. So that was SKEW. Now let's have a look at flows. So I've got the Bitcoin option flows and the Ethereum option flows split out. So here you've got, again, GVols monitors straight off their app. You've got this option scanner, and then you've got the good old block sniffer that I always use to highlight the flows, okay? So it's the combination of these two really helps you identify what's going on in the market. So what are the trades that we've seen in Bitcoin? So we saw a large seller of March, June 21 call calendars. That's kind of selling the June and buying the March. So selling Vega, but buying back some shorter dated Vega. Not really sure what the motivation is to do that trade. We've seen similar trades go up in Ethereum. So it might be like a miner or something that is systematically short upside, and then they're rolling that short upside out to longer dated maturities. It might be something like that. Upside was being bought in call spreads, March 20K, 23K call spreads, and also June 23, June expiry 40K calls. So we said, people like parking their bullish trades in slightly longer dated maturities, buying those June calls. Continue to find some buying interest. They're quite far out of the money though. Shorter dated speculation is all call buying. So 20th of Jan, 17.5K calls. And then we also saw some strangles being rolled. So January strangles, 14K, 20K strangles, they were being rolled into a short February strangle. So it looks like people are buying back the Jan strangle because it's not worth a lot anymore, and then selling that premium in February as a bit of a systematic theta earner when these things aren't really breaking out either way. And then we've got a bullish risk reversal seller selling the 13K puts to buy the 24K calls. And then on screen, generally, we saw a short dated two-way flow in the put side in January, 14K and 15K puts. So quite active there, but generally most of the flows still skew to the call side. Okay. Now Ethereum flows were down quite heavy, 30% on the week. So flows are definitely going down as open interest. We said last week, open interest absolutely collapsed after December. So flows in generally are a bit lighter, but still a 70% bias towards calls. Similar to Bitcoin, January calls being bought on this sort of mini break higher. People taking advantage of what looked like relatively cheap vols to play the gamma of a potential move if this thing really can get going. So 1,200 calls being bought on the 27th of Jan here, and the 1,300s also being bought in slightly shorter maturity. What else have we got? February versus June call calendar diagonal was bought. So people buying forward vol there. Like I was saying, owning June vol but funding it by selling a bit of shorter dated vol when the curve pops is not a stupid idea. It's a way to carry that longer dated Vega position, but not pay a load of theta right now where you don't anticipate short-term movement. So we did see that. We also saw just some June outrights being sold in the 1,700 area. We saw some call spreads being bought in March, similar to what we saw in Bitcoin, 1,600, 2,100. But the biggest trade by a country mile was a massive buyer. Well, biggest trade in terms of number of options. Okay, it's a massive buyer of the June 23 400 strike puts on Ethereum, which are miles out of the money puts. They're worth like only $10 per option. So if you bought 50,000 of those, you spent about $500,000. So someone felt compelled to spend $500,000 on basically an Ethereum put struck at about a third of where the current market is. Okay, so they're looking for some serious crash protection between now and June, some serious convexity to the downside. Now the vol on those things trades at 110 already, right? So even though you're at the money, vols in June are trading in the 50s or 60s. The downside's trading at the deep downside's trading at double that vol, right? Because people are pricing in the convexity of that potential crash in Ethereum. But someone still felt compelled to buy it. So I thought we'd flag it because it probably was the standout flow out of all of crypto options last week. All right, so that's the flows. And I've added this gamma positioning. So GVol obviously do this GEX indicator. They track every trade that goes up. They ascertain whether it's a buyer or a seller from the dealer's side, and then they map this stuff via these different charts. So you can see kind of the gamma profile on Bitcoin and on ETH. They've also split it, color-coded it via expiries. So it's telling us that in Bitcoin, the street is kind of long 1,700 to 18.5 area expiring this week, this Friday. But behind that, it's short the following week and the week after. So it's short into the end of Jan. So that's the current street positioning, right? They're long gamma here into Friday, but they lose that gamma and they're short behind it in the next 2 weeks, okay? In terms of the aggregate position and kind of how that's behaving in terms of flipping long and short, you can see that we've kind of gone from a neutral position before the market broke higher, and we kind of dropped down here into a slightly short gamma position. So that kind of explains why we caught a bit of a bid as well in terms of short dated vol, because if the dealer's overall position went from relatively neutral to a bit short on the rally, maybe they then scrambled to cover a bit of that front end, which is why it went bid. Okay. Now, similar story on Ethereum, similar setup where they're long gamma here for this week. They're short behind it, but they've also got these yellow bars. And these yellow bars are March expiry on the upside between kind of 1,500 and 2,000. So that's a bit of flow that Bitcoin doesn't really have, where there seems to be quite a bit of March upside selling that's given the dealer community some March upside exposure. Okay, and that's why the gamma position, was a bit longer in Ethereum before this move started. But as we got the move and as we started to rally, the same thing happened, right? The gamma kind of evaporated and the street gamma position collapsed. And that wasn't just because of the move in the market. If nothing had happened, if no new flows had hit the market, the street might have got longer because it started to move towards a load of those calls, okay? But remember, the street got lifted out of a load of January call options because we showed in the block sniffer that 1,200 calls, 1,300 calls were being bought in Jan. So that was the sudden drop in dealer gamma came from the fact that as we rallied, dealers got taken out of short-dated calls, which took them from being long gamma to close to flat gamma here, basically, right? So I think they're quite neutral. So I don't think dealers are in like a bad spot. It looks like we're near the zero line here, right? So, but just flagging that we can track this now with the help of GVol, we can see what they perceive to be the gamma position of the street and how that's evolving through spot price movement, but also through the new flows that are occurring on a real-time basis. And I think that's quite a cool tool. Okay, so that's the new bit of analysis I added for this week. Little Brucey bonus. And then if we move to crypto strategy, so what have I been up to? That's what I'm here for. I'm here to teach you guys how to use options in a smart way, manage risk intelligently, and understand how to not blow yourself up in options, right? Options selling is by far and away the systematically right thing to do. If all you ever do is buy options, don't expect to make a bean in life, right? Selling options makes a ton of sense. It's the right thing to do a lot of the time. If you do it systematically, you can make loads of money. But if you don't know how to manage risk and you don't know how to do it safely, then you can blow up an entire year worth of P&L in a matter of days. And I want to stop you from doing that. Okay, that's my little rant for the day. Take that message away with you, and I'll catch you guys next week. Cheers.